Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm going to break down some trades for you that happened on GBPJPY and EURUSD on Friday, which was a little bit tricky to be honest with you, especially the GBPJPY. But I'm using the same strategy, same setups, but the way it was formed was a little bit tricky, and then I want to show you how you could have identified this opportunity if you wanted to enter a trade. And also, as you can see, I'm on a screen on my FX book on Gold EA Incubator. As you can see, on a $3,000 account, we've been able to gain 152% in profit, which is $1,701 completely hands off. We didn't trade manually, everything happened completely automated. So this is a second $3,000 account that we have, and it's called Scaled, and the reason is that we deposited more money when you started seeing more results, and the balance is currently at $4,191 and the profit is $1,191. So we started this account is in April 15th all the way to June 10th, which was yesterday, Friday, and we are up over 61%, which is really good in my opinion because there was no emotion involved. We didn't trade manually and everything happened completely hands off. And here's our $1,000 account, which is our actually master account because we started this in May 7th all the way to June 10th, which is almost 3 months, and we are up 71%. We were up 134%, but we manipulated some of the stuff. That's why it caused this drop from May 16th to May 17th. So it was actually our fault that this happened, but we released 3 new preset files that significantly help the traders trade with Gold EA Incubator, and they are getting way better results. As you can see, the profit is $738. So without any further ado, let's get into the trades that happened on Friday. So this is a trade on GBPJPY. I'm going to remove everything and show you how it exactly is set up. So if I do a little bit of replay for you at 8 in the morning exactly, when your session opens, as you can see, the trend is downtrend for sure, because if you zoom out, you can literally see the trend of the market, which is bearish because of these lower lows and lower highs, consolidation here, break of a structure, lower lows and lower highs, break of a structure. So we have multiple break of a structure towards downside that makes this trend a downtrend market, right, on 5-minute time frame. So even if I go to 15-minute time frame, you can still see the same thing, that we have some major break of a structure towards downside. So it doesn't, because when you're using a smart money concepts strategy, you shouldn't be totally biased on one trend. It could be like a downtrend market and then you buy it, or it could be an uptrend market and then you sell it. So it doesn't really matter, but it's way better to identify the trend before jumping into the trade, because your trend is your friend. So the first thing that you can notice right here is this high probability supply zone exactly here. But I personally don't really like this high probability supply zone, and the reason is that we have a huge gap from here all the way down here. So this gap has eventually be filled, right? It has to get filled eventually, no matter what, because when there's a gap, when we have multiple bearish or bullish engulfing candles back to back, it means that the market created some sort of gap and it has to be filled in eventually. But since we have a high probability supply zone really close to this one, I personally don't consider this one, but I still draw it for you guys to show you that this is a high probability supply zone. And if you still don't know what the definition of high probability supply and demand zone is, I highly recommend you to watch my other videos on my channel, or I put a video above this video that you can click on after watching this video and see what's going on exactly with this strategy, which is absolutely crazy, and I'm biased on this strategy because it's so accurate if you're a scalper. So if I move forward, you see that it literally disrespected this zone, and this candle literally got out of the box, as you can see right here. So it means that this zone is disrespected, right? So I'm going to remove it immediately, and then I notice another high probability demand zone from here to here. Look at this. This is a high probability demand zone, and the next candle after that literally filled in the gap super quickly, super fast. But there's also one more thing you need to pay attention to this one, which is really tricky. This candle, which is a doji candle here, is a green candle. Look at this. If I really zoom in, you see that this is a very subtle green candle that counts as a high probability supply zone, because this is the last bullish candle before this candle drops, and the next candle after that never tapped into this zone. That's why there is a gap between this candle and this zone right here, which makes this zone a high probability supply zone. So which is very, very important, and a lot of people didn't see that. So what happened was that this got disrespected, so you literally remove it, and then you see that this candle is the first candle that tapped into this zone, and it got pushed towards downside by sellers. So it means that sellers are really strong around this area, and they try to push the price towards downside, and you know that it's probably going down further because we also have a downtrend market. So this is a high probability supply zone, and after you see this candle here, it's a very, very strong confirmation that the price tends to go down further. So I use Profit Master Incubator to calculate my risk reward ratio, guys, and I easily put my sell stop here, and I put my stop loss above this candle, and then I put my TP 1-to-1 here. But you got to be careful with your TP, guys. You shouldn't just take a 1-to-1 trade if you don't have anything after that, because you got to have a specific TP or stop loss positions. So if I go to 15-minute time frame and I zoom out, you see that we have a support level right here. So each support level has a bunch of liquidity below that. We have a support level here. We have a support level here. See that all these levels are major support levels, and they have multiple, like, you know, millions of dollars of liquidity below these levels, and this is the closest one. So if I get back to 5-minute time frame and I want to really take my position, I probably can take it all the way to here if I want to, or I just move my stop my TP right here to take a 1-to-1 and get out of the market. So if I want to take it all the way to here, let's see what happens. So see that my seller stop gets triggered here, so I'm in a position right now. And then if I go down further, you see that I already can take my 1-to-1, but if I want to take my 1-to-1.5, this is exactly what happens. Let's see if it gets triggered or not. As you can see, it actually got triggered and smashed my TP. The reason is that the price wanted to reach this support level to grab the liquidity and then change the direction of the market if it wants to. So as you can see, there's a bunch of money sitting below this level, and that's the purpose. That's a goal of banks and institutions, to actually reach those levels, grab the liquidity, and either go back up or change the direction of the market, or just keeps going the way it was going. So let's see how far it's going, because we also have a support level here. I want to see how far it's planning to go. Look at this, guys. It even triggered this support level as well. So if I wanted to take my second TP here, look what would have happened. 1-to-2, almost 1-to-3 risk reward ratio trade. This is the third support level that we have, and we could also take it all the way to here. I personally don't do that, but if I want to do it, I take multiple positions. I take my 1-to-1 first, and then I take the other ones, you know, risk free. So I get my first position smashed, 1-to-1, and the rest of the stop losses move to break even. So I have 2 or whatever trades risk free. So let's see what happens on this one as well, because I'm pretty sure that we also have this support level here, but I'm not sure what is going to actually smash that. So it actually did, because we have a liquidity grab with this candle here. Look at this candle, guys. This is a support level, and this candle literally just, you know, got out of this support level a little bit, grabbed the liquidity, and now it changed the direction of the market after grabbing the liquidity. See how beautiful this trade would have been if you could identify one candle as high probability supply zone, which is this one here, and using Profit Master Incubator. And if you want to see Profit Master Incubator, I can literally show you how it works to get into the trade super fast and not risk too much, because it calculates the proper risk reward ratio in less than a second, depending on the percentage you're willing to risk. So I'm going to get into my terminal, one of my demo accounts, and show you how it works. Okay, so this is how it looks like. So when you have Profit Master Incubator installed, you will see this name on the top right hand side, right hand corner on the top of it, and then we have this box right here with sell, buy, and delete. But since market is closed right now, I can't open a position, but I can show you how it looks like. So you literally go to the settings, and then you actually identify the amount of risk you are willing to take. So let's say percentage of risk relative to equity is 2%. So it means that I'm willing to trade. I'm willing to risk 2% per trade. And the way it works is that you just select 2, and then you activate your automatic lot, you press OK, and let's say that you want to put your buy stop here, your stop loss here, and then your TP somewhere around here, and it calculates the proper lot size for you depending on the risk you're willing to take. So the white line is my entry points, and this is my stop loss. Look at this one, guys. $28 is 2% of my current balance, which is $1,400 on a demo account. And it doesn't matter where I put my stop loss, it keeps changing the lot size relative to my percentage that I'm willing to risk. So let's say that I want to put my stop loss here and my TP is right here, and then I press OK. It opens the trade, but the market is closed right now, and then I can literally get into the market, get into my trade super fast without wasting any time. So this is how it works, guys, on GBPJPY. Let's get into EURUSD and show you exactly what happened during EURUSD. It was a beautiful trade on GJ, but even if you take one-to-one trade, it would have still been a really beautiful trade. So on EURUSD, guys, it happened way later during the day. It wasn't, it was kind of outside of my trading hours, but I noticed it, and I'm just going to quickly share with you that what exactly happened. Because 8 in the morning, literally started from here, and this trade happened at 15, like at 3 p.m., which I don't really look at the market at all. So, but what happened was that we have 2 back-to-back bullish engulfing candles, and the next candle after that, which is this one, dropped significantly, and this one right here, there's a tiny gap from this candle and this zone here, which makes this zone a high probability supply zone. And then if you wait, you'll see that this is the first candle that tapped into the zone. If you put your sell stop here, it never gets triggered, but a few minutes after that, you have this beautiful candle here that can put your sell stop below this, your stop loss above the previous candle, and then your TP here, and you can literally take a one-to-one trade. But if you're trading after 12 p.m. on Friday, which I don't really think anybody does, but I just wanted to share with you guys that how high probability supply and demand zones work. But the trade on GG was absolutely fire, and I still love it. And the only thing you need to do is to identify high probability supply and demand zones on a 5-minute time frame. And if you want to take multiple trades, you need to identify support and resistance levels, and then you can get out of the market based on those levels. But if you want to take a one-to-one trade every single day, it's totally possible. If you take 10 to 13 pips every single day consistently, I can guarantee you that your trading journey will transform significantly. So let's say your first TP is here, your second TP is here, your third TP is here, and then all of them are risk-free. So thank you so much for watching this video, guys. If you have any question regarding anything, manual trading or the tools that we are using, the expert advisor that we are using, any of that stuff, feel free to ask your questions by checking out our website, which is smartyincubator.com. I'm gonna leave a link below in the description. We have a live chat which is 24/7, and if you have any question, you can contact your support team and we'll get back to you as soon as possible. So again, thanks for watching this video, and see you on the other side.